Tonight, I wanted to look at Jankowski, his time compression trading book, and I want to go back in and dive in one more time with all of you, and then we probably won't look at it again for at least a year. The 5 basic market structures. And before I throw them out there, while you guys are here with me, everybody throw me in one basic market structure. Tell me one type of the 5 in the chat, and we'll see if we can get all 5 quickly. And I'm kind of cheating because there's 2 visible in my picture here. We've got an uptrend and a range. There's 2. We've got a downtrend, okay. A reversal, yep. And reversal, guys, that's a trick, is 2 of them, because you can have a topping market reversal or a bottoming market reversal. There's all 5. Good job. So you all have been around for a while. You've paid attention. Jankowski nails these 5 market structures down to a topping market, a bottoming market, a secure uptrend, a secure downtrend, and a secure range. Zach says, do topping market, make me feel better. Ha. Actually, we are going to talk about a topping market, but we'll do that when we come back the next time I meet with you all on Sunday. Tonight, I want to cover a bottoming market one more time because I really want to get this into the foundations course. And I think this is a really important lesson given where we are on the chart. Because if you are feeling any FOMO right now, if you are worried about where Bitcoin is, and you know what, I'm going to do this a little different tonight. Instead of sharing just one box here, let's do a little side by side. This will be a little more fun, so we can all see what's going on here together. And I don't need this for now because I'm in here. So now you all can look at the chart while we talk about a bottoming market. Specifically, keep in mind this area right here on the chart. And I'm going to zoom out a little bit just so that you can compare where we are currently to this last swing low, which happened back in December 2018, about 33,000, 3,200, and the all-time highs. Look at the volume. Notice that a lot of times what happens in significant areas is we get peaks of volume that point to areas of significance. Usually those are the swings, right? This volume is pointing to the all-time high. This volume swing is pointing to the drop, to the swing low. This one is to our failed quote-unquote secondary bull run, and then this one is to the last swing low. The issue that we have now is if you didn't buy Bitcoin here, and you didn't buy Bitcoin here, and you watched this happen, and then you realized it would be dumb to buy here, so you were smart, you sat out, you waited, and then this happened, and you decided to keep waiting. And now you're here and you're kicking yourself. You missed 100% move. You missed the low until we go even higher. Here's the thing. If you missed out here or here, in order for this to be really bad for you long term, this has to be a bottom. This has to have been a test of that bottom and a proven support, and we have to be turning this ship up into either a range, something, let's get this a little better position here. And let me just borrow this regression trend here. Let's just look at what's happened here. So you're thinking that we're kind of doing this, some kind of a sideways range, and we just overextended at the all-time high. Now we've bumped against that range, and what are we doing? We're sitting right in the middle, the average price for what has happened between now and September of 2017. We're right in the middle. And you're sitting there asking yourself, did I miss something? Have I lost my chance at making my $1 million within 2 years and retiring and chasing all of my dreams? Is it gone forever? And now I'm just an idiot because I didn't pick up Bitcoin right here. Guys, gals, people listening, people in the live room, people in the recording that are listening in the future, there is no rush. I don't care whether you forgot to buy here and the market's sitting here, whether you forgot to buy here and the market's sitting here, whether you forgot to buy here and the market's sitting here. There is no rush. And the sooner you step back and relax, the better off you're going to be in your trading and in your life in general. So the question we now have to ask ourselves is, was this a bottom? Because for this to be a safe place to enter, we have to know to some degree that this is going to be some kind of a support that holds, so that if we enter here and we put a stop down here, we're not going to get stopped out. This would require about a 50% stop. If I was to enter now and I was to truly put a stop where I would be underneath the last swing low, you're talking about a 50% drawdown. It just makes no sense in the big picture. Now, if you are a trader that's looking down in here at this 1 hour, and you're thinking maybe I can catch a little bit of this action. Maybe if I buy here, at worst it'll come back to here, so I can put a stop down here. Okay, so now I'm working with an 8 to a 10% stop. That's a little more doable from a position sizing standpoint, but what am I going for? What am I hoping to accomplish? Assuming that I even get up to the last swing high, you're looking at a potential 50, 40, 50% gain. That's stretching it, 40% gain. As you start to get used to watching crypto over and over and over, you realize that 40% come and go. Every month, something does 40% somewhere. If you're really that set on 40%, spend your time looking for the setups. Spend your time looking for, oh, here's that triangle pattern again. And I see that they made a move in here on some buying, and maybe I can measure some kind of a fib extension in here. If I really wanted to get in here and look at where most of that buying came in, it was on that wick. They came up to about here. Okay, so maybe I've got some kind of a trade set up here, and maybe they're going to take me to 11,000 if I think they're going to get up to the top of my range. Okay, it does not matter where you are currently at price. You can find some kind of a setup, but your question is risk to reward. It isn't, can I trade this? You can trade anything. I think that's the big part that people really forget when they're starting out or when they're still caught up in the emotions and the hype of trading. You can trade any chart, any time. You can. You can't win every time. You're not going to get a gain every time, but you can trade every chart every time. So if I'm going to enter here long and I'm hoping to go up, I need to come back and make sure this is going to protect me. I need to come back and make sure that I've proven support here. Now you can say a lot of buying came in here. It surely did on this bounce here. I would have to dig into the really low time frames to argue this, but what I really want to look at is this. So before I go too long, I want to dig into what Jankowski says about bottoms, and when I do, pay really close attention. Before I zoom in, I'm going to zoom in. Just look at the volume. Okay, the volume in this area on the drop was less than the all-time high. It was less than the recent drop. And right after the drop, when we went sideways, it kind of held steady. There was a little push when the bump came in, but there wasn't a whole lot going on. So now I'm going to zoom in. Now that you've kind of got that relative picture, I want to zoom in here. Oops. I'm going to bring this over a little bit because we don't need that whole view. We want more of the chart to look at. And I really want, while I'm reading this, just kind of take a look over here. Think about what's going on here as we read about bottoming markets. JP Morgan was an excellent trader. He liquidated at the highs 3 days before the 1929 stock market crash. Granted, keep in mind, he liquidated at the highs because he had ties to everything. He was known for buying when nobody wanted to buy. There's a sound reason for this. In fact, it's one of the keys to successful speculation. Bear markets end in a rush of frustration and disappointment. Do we see frustration and disappointment on this chart? Do we see an end to a bear market on this chart? When a market's in a downtrend and is ready to end in range or reversal, a prevailing sentiment creates the bottom. That sentiment is disinterest and refusal. By that, I mean the bulls have grown so frustrated trying to pick a bottom, buying the dip, buying the dip, buying the dip, they've given up on a rally or a change in trend. The bears with open trade gains are holding very little in terms of size. They were liquidating on the way down. And they finally quit altogether too. So if this was the bottom, the bears should have given up. Okay. The bears with open trade gains are holding very little, and it's off. At this point, most participants are looking elsewhere. So during this time, most of the crypto market should have been looking elsewhere. Okay. I'm not making a judgment yet. I'm just reading in the context of the story. Now, think this through. If a market has been in a secure downtrend for a longer period of time and it reaches an important low price, who benefits? No one. Producers or miners are frustrated because the product is priced at a level where it's hard to make a profit. Did we see that take place? Probably. For a lot of miners, maybe some areas you could argue no, but for a lot of miners, we saw that taking place. Often the producers cut back on production, so the hash rate should have fallen significantly during this because that would have been your production cut. When every market participant throws their hands in the air and says, I quit, I'm going someplace else, you have a market bottom. It's only professional buyers who have interest at this point because sellers are not going to deploy their capital without some potential. Were these professional buyers? Do you see accumulating of professional buyers in significance relative to other buying that's taking place? Look at how much buying came in after the move took place. Interesting. Most bottoming markets attract the professional buyers, but they don't attract the public. Professional sellers are likely out of the market or willing to sell into a small rally for an attempt at further gains. Okay, so maybe in a small rally, selling into that. But the major difference between a topping and a bottoming market is that when a market is at a low price and creating a bottom, professional buyers are the only interested participants. Because they buy in small size, absorbing the small size from order flow, from professional sellers who are not willing to commit more capital, the order flow is mostly balanced. So the order flow should be mostly balanced. Here's where it gets interesting. Guy says, I don't see how Bitcoin can go in the traditional market box as an entirely speculation. There's so much dumb money for this to bottom. We need a catalyst, something huge, maybe a tether bomb. Sure, I could see that. How about this for a catalyst? What if we swing below the cost of mining? What if half of Bitmain shuts down their mining operation because it's no longer profitable? Did we see that take place? Because I'm sure that if Bitcoin lost half of its network strength and became quote unquote more vulnerable and quote unquote less decentralized in terms of mining, that would be a lot of FUD thrown out there, and we'd see that get leveraged. So characteristics of a bottoming market, let's talk about it. A bottoming market typically has very small price ranges into the bottom as there's light activity. This was a pretty small range for Bitcoin, relatively speaking. A bottom represents a huge opportunity simply because the market's being accumulated by people who are not going to put liquidating orders out there possibly for months. The drive to higher prices is professional sellers covering small shorts quickly because that's what professional sellers will do when losing. They cut their losses quickly. So the market is accumulating bid pressure as the professional shorts cover back when buyers accumulate more of the market and don't sell. Did we see a lot of buying and no selling taking place in here? I mean, it looks pretty even. There's a couple of buying spikes, couple of selling spikes. You also have to kind of go back to Guy's point. This isn't a traditional market. We've got several exchanges trading this, several over-the-counter places, several leverage places, several perpetual contracts that don't even affect the actual supply of Bitcoin. They're just gambling on the price of Bitcoin. There's a lot going on here. Let's look at a bottoming market ending in range. He's going to give us a picture here. And he wants us to pay special attention how much time it takes for market to actually put in a bottom. This is not price, but the perception of price and what it means for professional traders. So here he gives us this chart. And I'm going to go back to a little bit of more of a squeezed view because I'm going to have to rotate this for everyone to see it. Rotate clockwise. clockwise. Notice the drop. Notice the sideways. Notice the volume, pretty relaxed here. And then we pick up and go. Now you could argue this looks pretty similar. But what do you see here about the volume and open interest declining all year leading into the bottom? We had interest pretty flat this entire time as price was dropping. Now, when you have a balance in volume and a decline in price, that says that the selling pressure is building faster than the buying pressure, not in terms of volume, because volume is about equal, okay, but that the selling pressure is pushing the bid down more than the buying sentiment is willing to come in and buy at a higher price. Sentiment is failing with each successive bounce. There wasn't a whole lot of volume leading up into that, but again, volume, crypto, a lot of it's fake. Zach says, minor capitulation causes difficulty to reduce. That's true. Professional miners could dump it to a point where smaller miners are no longer profitable. Also true. So we're looking for that. Did we see that here? We saw some of that. I read a couple of articles about small operations getting shut down. Granted, they probably waited until after this 2017 run to get into the business. A lot of people that came into mining late failed because they got into mining with this kind of a market in mind, and this happened. But people that have been mining since down here, they don't care. They don't care that Bitcoin swung to here. And I really don't think they would care if we swung down one more time even to here, because they've been mining for years. Okay, so you have to keep it in perspective. There's all kinds of different time frames at play, both from the mining side and from the trading and investing side. So let's go back and look at, here's another picture he shows where there's a low for the year, and he uses the stochastic here to give us a little bit of a different picture about how it just died and went flat. And it didn't pick back up again until the turn started to change, sentiment started to alter. So let me get back in here real quick. I got to keep moving quickly because I don't want to go all night. But the market was not, so in the example that he gave us, the market wasn't attracting size or committed players. The price was at the best place to buy in almost 10 years. Now, this was not the case. It was the best place to buy in 1 year, 1.5 years, okay? Who were the buyers that started the rally? It took another year to double in price. Who came in here? Was this real retail? Was this institutional? Was this Tether? Because here's my next what if for all of you out there that are trying to decide if this is a bottom. If Tether came in and pushed us up, did we really get a chance to bottom? Did we get to die? Did we get to crush our sentiment? Did institutional players get to enter? Or did Tether come in, pump, have to take some more money, and then get an opportunity to exit more real money for its fake Tether? That's the question you also need to be asking yourself. That's our fourth part of influence going on in crypto. Now he goes into these specifics about two types of bottoms. One type of bottom he started to allude to in here. Let me see if I can find. It's a bottoming market that ends in a range. Okay, that was the one we were just looking at. And if this was a bottoming market ending in a range, that's what we would be looking at, a long, slow death. The other type of bottom is a reversal bottom or an exhaustion bottom. This would be something more like this. Exhaustion, snapback. A V-shaped recovery, you sometimes hear it called in equities markets. It's slightly different from the range bottom. It spends a lot less time at the bottom price, and the volumes are much higher. The market's usually not a significant low price, but at a mid-range price. Okay, interesting. Often this kind of bottom becomes a yearly or quarterly bottom, but the actual bottom prices are within a larger time frame range, as happened with, and this is pretty fun irony, crude oil in 2009. So those of you that are still worried that we missed the bottom, Chris, I'm not looking at you, wink, wink. Those of you that are worried, go look at oil. Look at what oil did in 2009 when everybody said the bottom was in. Look at oil now. Guy says if oil can go to zero, everything can go to zero. Now, Bitcoin, it's a little bit trickier because the situation with oil going zero and negative, we had a situation where, so thank you for laughing, Chris. That was definitely me poking fun, not to hurt anyone's feelings. Oil went negative because it cost more money to hold it in storage than it did for somebody to take it off of the holder's hands. Cost of carry. There wasn't enough demand to use that oil up, so the person couldn't sell it, and then it became expensive to hold it. Bitcoin is a little bit different. It doesn't cost you anything to sit your Bitcoin in a paper wallet. However, imagine a future 50, 100 years from now. Hopefully we've gotten into space and gotten more supplies, but let's just say, for sake of argument, that the supply of mining equipment for Bitcoin gets strained to the point where when Bitcoin swings down, it gets so low that the cost of mining it, the cost of the equipment it costs to mine it, to keep it running, and the electricity for everybody in the market becomes more expensive than it is to turn it off and just sit. That's when you have a problem. Any type of situation where you are producing something, Bitcoin is produced with electricity. Do not let it fool you. Just because it is digital does not mean there is no production cost associated with Bitcoin. Just because you went on an exchange and bought it on a deal where you had to pay no fees doesn't mean there was no production cost. That being said, Bitcoin can go to zero. It can. Will it? I sure hope not. That's going to be really scary if it does. If it does, we're going to have to take a really long, hard look at what's going on in crypto for real. And if you were in it when it goes to zero, you are SOL. That stands for something out of luck. And S stands for a different word, but I'm not going into that. I'm not Scott. So let me go back to this point I'm making. This was very rapid relative to a stock market bottom. This took place 9 months, 6 to 9 months, and it came back very quickly on high volume. When you start to look at it from this perspective, and for some of you, if you have not looked at this on the weekly chart, you might go, aha. Look at this snap action. Look at this volume. Does that look like a true bottom with a range that proves support, gives the big picture time to accumulate, allows the large players a real chance to get into this market safely? Now we're at this long-term moving average here again, this 44 period moving average that just came into play here. It found some support on it. We've already broken it though. They've already proved that this doesn't mean anything to them, at least in a short term. There's no reason why they can't go just as easily back down here, tap this and come up again. There's no reason why they can't come down here and do our sideways bottom on low volume for a year, year and a half before we start to see something really happen. Now, there's no guarantee they do that. So our job is to decide if this was truly a bottom, if this was truly a support test, and if this is a safe long-term entry. That's your job as a trader investor. Me personally, I look at this and I shake my head. I do. I see this kind of action going here, which ended up to be a reversal. I see a real sharp turn with high selling, a little bit higher buying to pull it back out, but then this happened. Now, is this people want to say, is this a bull flag? If it is, what's going on here? Was that just an attempt to square this up before we take off? It could be. And if it is, guess what? If it is, oh, that was a terrible line. Terrible rainwater. If it is, guess where I'll be waiting? Somewhere right around here. or right around here, waiting for them to prove it to me, because there's no way in HE double hockey sticks that I would ever pick something up long-term at the top of a local downward moving channel in a big picture. It doesn't make sense. The only reason why you should be asking yourself, do I buy Bitcoin right now at this moment, is because you see some kind of a short-term setup and you see an opportunity to do some kind of a trade in here where you're going to put a stop below this quote unquote trend line. You're going to enter somewhere in here and you're hoping to get some kind of a 40, 50%. If you are looking for long-term Bitcoin and you're trying to enter here because you panicked and you didn't buy here and now you're FOMOing, you're buying for the wrong reasons, you're doing it on emotion, you don't have a real big picture long-term plan, and you're crossing your fingers hoping that you got in at a point where this was the last swing low and you just happened to get in at a point where it's not coming back, your money is safe. Zach says, isn't that the wick basically another liquidity gap, 3.8K? They show that they go that low, so now smart money will wait to accumulate down there again. I mean, you could make that case because a lot of people were saying once we got above 10,000, we would never go that low again. Well, they just proved us wrong there. So some people now say, oh, I'm waiting for it to come back again and then I'll get in. At the end of the day, here's what you need to keep in mind. Your entry doesn't matter. This is so hard for us as beginners to accept. It is so hard for us, the perfectionists out here. Zach, I'm looking at you because I'm one of them. It is so hard to be a perfectionist and to miss a swing low or a swing high. Either you didn't buy on the swing low, you didn't sell on the swing high. It is so hard to rectify the fact that your entry means nothing. Because when you're a perfectionist, you want this and you want to buy here and you want to sell here and you want your beautiful, happy, perfect, I caught it all, 55%. Oh, sorry, let me get it perfect here. 62.33% because I got the lowest part of the swing and I sold on the highest part of the swing. Now am I a good trader? Am I a good trader now? Because I got the low swing and the high swing. Isn't that the whole goal of trading? Step back. Stop trying to make it perfect, because this is not shooting free throws from the free throw line. Every trade is not the same. You can't do it over and over and over and get it perfect. It's not going to get better. One trade does not make the next one better. That's where you are messing up. There is no way you are going to catch this perfect trade and all of a sudden all the rest of your trades that follow are going to be perfect because you figured the secret out. That's not how trading works. You have to be willing to watch this play out, to still have this picture in your head, but to see them hit here, you missed it. They come up, they come back, and they stall out. Okay, so I bought here. And then when they come up and they give me this big push, maybe they pull back. I pull my stop under here. They go up. They pull back again. I pull my stop under here. They go up. They get out of this. I'm selling. I don't give a crap anymore. I'm selling. That is how you trade, because it takes place in real time. You can't look backwards in the past and expect to make yourself perfect. That's not the goal. The goal is to find a system that works good enough that you catch enough of those swings that your winning percentage out averages your losing percentage. And if you set your losing percentage at 2% every time, you just have to make more winning trades than losing trades, or you have to average a greater winning percent than 2% more often than you lose 2%. It doesn't matter whether you bought Bitcoin at 4,000 or whether you waited to 7,500, as long as you know how to exit properly. Amos, you don't make anything till you don't sell. Thank you for saying you don't make anything. Because so many people want to say you don't lose till you don't sell, and that is so wrong. You lose out in the ability to trade when you're stuck upside down holding a losing position. You do lose. You lose time, and time is more valuable than the capital you've got sitting on that position any day of the week. Pun fully intended. So what type of bottom was this? If it was a bottom, and if it was a bottom, why didn't you buy here? And if you didn't buy here, but you think this is the bottom now, what's your plan? What are you going to do? Are you going to sit with your fingers crossed, hoping it comes back to you? Are you going to buy it now, put everything into it, and when it drops anyway, dollar cost average? Your goal should be to get as much of your capital onto the board with as low risk as possible. Not just to get it onto the board. It has to be got onto the board in as low a risk situation as possible. Ron says square ups below. Right. Brett says Brett says I didn't buy the second dip because it was a wick and I didn't have cash sitting on an exchange ready to go. Brett, you're preaching to the choir here. How many of us have known there was a potential for Bitcoin to fall, but it was going so slow at the time, we didn't think it was going to go that fast, so we didn't have our capital sitting on the exchange, or you didn't have your alt sitting there ready to sell because you were being prudent. You took your alt off the exchange because you wanted to make sure it was safe until it got to your target, but then all of a sudden when the market tanks 50%, you can't get it on there because it's in wallet maintenance. You have to have it planned out 10 steps ahead. If you are waiting for the market to swing to a low so you can buy in, your capital needs to be sitting on the exchange ready to buy when it happens. It needs to be sitting there ready. If it's tied up in an alt trade because you got impatient, because when it dropped a little bit and then it swung back, you thought, oh, nope, this is bullish. I was wrong. I was totally wrong. It's going to keep going now. I better buy here. And then you got stuck in your alt trade. You fell victim to the FOMO. You put your position in too heavy, too fast, in an unsafe way. Matt says, I pulled my buy at 4,300 because it's falling so fast. Yep. Here's the thing. When you make a plan, you stick to it. And then you measure whether it worked or whether it didn't. If you change the plan while the market is moving, guess what you just did? You made a mistake. You need to go and journal about it. Because the next time the market moves, how are you going to make your plan? So what is your plan to change when the market moves? And Matt, I don't mean to pick on you. I've done this before. This is for everybody else who hasn't done this yet. And we're all going to have to face that moment where we had a plan and the market came violently hurtling towards our buy or our sell target. And now we are freaked the hell out because holy hell, it just went 50% in one candle after it didn't move, but 10% for weeks. If you get complacent, if you get comfortable in terms of your watching Bitcoin move and getting bored, if you start to feel bored, you need to come over here and click the replay tool. That's these little two arrows here. You need to come all the way over here to just before 2017. And you need to play the I'm bored, let's watch Bitcoin move game. I'm just going to put it on play. I'm just going to watch it move. Look at it go. Ooh, this is fun. Okay, look at that. Oh, oh, it can move like that? Holy hell. Oh, where'd we go? Oh, good God. And look at how it falls too. Okay, all right. Now we go back to the present moment. Reminding myself how it can move, how fast it can fall. What is different from here to here? What's changed? Anybody? Somebody tell me. What from here to here has changed? Volume, Guy. Yep, volume dropped off a little bit. Jorge, volume. Besides the decline in volume or the stagnation, if you want to say it stayed pretty flat. Taco, but nothing really. The only thing that has changed guys, gals, people listening, is the amount of time we've waited for the next drop. And they know that. Over here, we were still excited. We still just had this happen. Fast forward 1, 2, 3 weeks. Yawn. I'm bored now. Oh, but guys, whoa. I've been bored for the last week, and look what just happened today. Finally, Bitcoin did a 9% move. Context is everything. Perspective is everything. Everything. Tell me what you missed out on. Please tell me. And if you really, really want to get down to it, what's to stop them from getting in here and doing this guy again? If you really want to get simplistic, you really want to talk about fractals and repeating patterns, if you are sitting there finding yourself itching to click the button because people are screaming bull markets on Facebook, people have got coins popping 250%, some coin nobody's ever heard of, and you're feeling that FOMO, first of all, zoom out. Second of all, look at this. Look at this. How is this any stronger than this, and what makes this change your mind to being bullish over this? I missed out on my original plan. Every good plan is meant to be broken. New plan in progress. That's all it is, Brett. It's having a plan. Your plan works or it doesn't. You adapt and you change. Exactly, Taco. Adapt and overcome. And then you try a new plan. This is a situation where you need the Tesla approach. You need I call it the Tesla approach. Edison would say, the famous quote, I didn't find a way that worked. I found 10,000 ways that didn't. That's trading. He stole it from Tesla, but that's trading. You need to eliminate all the things you're doing wrong, all the things that don't work, all of these emotions that are causing you to make mistakes, deviate from plans that were laid well, that in retrospect would have worked if you'd given them a chance. No, not the quotes, Simon, just the technology. You need to give your plans a chance to work or fail without trying to fix them while they're working or failing. You have to not let your fear of failure prevent you from learning from that failure. If you're constantly fighting the market to adjust your trades and your behaviors to shield yourself from failure, guess what you're doing? You're spoiling your inner child trader. You're protecting yourself from the pain that would allow you to grow into something better. Put your 2% training wheels on, define how much risk you're willing to lose in a trade, and go out and test some dang trade setups. Stop waiting for somebody to tell you, click the button here, because you're going to be waiting forever in Trade Crypto Live. Nobody's here to tell you to click the dang button. You want to have someone tell you to click the dang button, go follow one of those Instagram accounts that puts out free signals and see how quick it works for you. You need to put your big boy or big girl pants on. You need to sit down, write out your plans, just a couple to start, and then you need to have the follow through to test them on paper or test them with a little bit of real money. And then you need to let them fail, because they're going to. Your plans will fail. That's part of how this works. If you stop them from failing, you stop yourself from growing. You stop yourself from growing. You make the same dang mistakes over and over. And you sit there and you beat your head on the screen going, why the hell didn't I buy it this time? Scott told me it was going to 2,800. Why the hell didn't I click at 4,000? Because you don't trust yourself. Period. Point blank. Go look in the mirror. Can you even stare yourself in the eyes for a minute straight without looking away? Because if you can't, the market's going to take all your damn money. Stop worrying about getting it perfect. Stop worrying about the precise number. Start worrying about losing your money because you're getting emotional. I kind of went off on a little bit of a tangent from our talk about markets, so I'm going to wrap it up here real quick, and then I'm going to pass it back to Scott to end the room before we get to our 2-hour record.
Oh, don't worry about me. I'm over here playing with the linkers. I'm stirring them up. I'm having a good old time.
Let's wrap it up here with Jankowski. Let's wrap it up here. He says the best way to trade bottoming markets successfully is to select a time frame you know will control the market. He says such as the weekly. Do you guys think that the hourly chart over here is controlling this market? Do you think the 1 hour or 4 hour chart is controlling Bitcoin? I'm honestly asking, and I gave you all time to think about it, because if you're sitting here trying to buy right now, you think that this 1 hour, 4 hour chart's in control. He says if the market is truly attempting a bottom, the weekly lows will trade often and usually around the same levels with only a few minor moves beyond the worst weekly bottom. In effect, you're buying the bottom of the range before the reversal, but you might have to wait a long time for it to work. The exhaustion bottom is harder to trade because the volatility is usually higher. What's going on right here? These are like these swings are local exhaustion bottoms, and they're hard to trade because of the volatility, because of the emotions that go into it. If it has an exhaustion bottom, it will rally quickly, allowing the options premiums to widen, or in this case, the shorts and long spreads. But if a market has an exhaustion bottom, the advantage is that you buy at a time where it's a possible bottom, and if it's no good, you have a reasonable risk. So if you had bought, the reason why, you guys, if you're thinking that this is something you wanted to trade and you missed out on it, the reason why it's good to try and take this is because the risk down here is so low. Because it swung so hard so fast, it has a much higher probability of coming back. So if you're that kind of person, you should have bought it, put a stop on it, and walked the heck away, and not sat there and stared at the damn chart all day waiting for another $1,000. Get on there, put your stop on, set your 2%, go do something else and study the rest of the stuff you got to work on in trading. Because if you just spent 3-4 weeks staring at Bitcoin, you wasted your dang time and you didn't get any better as a trader. That's a double whammy. In any case of a bottom, you have to remain vigilant as the market climbs in price, because rising markets are more risky. Everybody wants to get into the bull market, but rising markets are more risky. Selling a bear is easier than buying a bull. And everybody's in a hurry to do it. Don't be that trader. Don't be in a hurry to expose your capital to risk when you've done such a good job getting safe and studying and learning. I'm not saying don't go out there and give a trade like this a try. I'm not saying that this is dumb to buy a trade here for a small swing. But what I'm saying is, if you put all your money in here because it went down without a stop in place, with no plan, just because, oh, gee, it can't go any lower, you're dumb money picking a bottom. But smart money can come in, buy in the same spot, have a solid exit plan and defined risk, and make a good trade out of a bad situation. And I think that people get the two confused. They're mutually exclusive. They can take place at the same time and have a completely different outcome. The difference is the person clicking the button, not the entry, or the exit's different, but not the entry. You can't miss anything. There is no rush in crypto. And personally, if you put a gun to my head and asked me my opinion, I'd say there ain't no way in hell that we've done a real bottom on Bitcoin, and we've still got a low to go. I don't care. I don't care at all if we swing up to 10,000 to get the square up from the drop. Couldn't care less. because when they do that, they're going to give me a lot more clues on the buying and selling side as to whether we've actually decided to turn for a new high or whether we're going to go hit that selling wall, and all those big boys that want to get their shorts back in are ready and waiting with licking their lips so we can go hit that red and blue moving average right at about 8,000 to 9,000 somewhere, and they can slam us the heck back down again.